Let's do a really fast BitMEX tutorial on how to place an order and set your stop loss. I'll do a more in-depth BitMEX tutorial later, but for now I just want to get through the essentials. As you are getting ready and practicing to trade for BitMEX, be sure to use the testnet.bitmex.com domain. You can start off with virtual Bitcoin and practice your trades in a simulator without the risk of real losses. The testnet BitMEX works identical to the normal BitMEX. Let's begin by opening the Orders tab and by opening the Your Positions tab. In the Your Positions tab, we can select our leverage. For this example, I'm going to select 3-to-1 leverage. The simplest type of order is the market order. We can buy long or sell short. When we place our order, it just matches us up with whatever is available in the order books at the time. And we pay the taker fees for taking positions based on the available orders. So in this example, I'm going to go long $100 worth of Bitcoin at the market. So I will click Market Buy, and the details of our order come up that we can double check everything that we're going to see. Now I can click on Buy to complete the order. You can see that the order was submitted, and because we ordered at the market, it's been filled. It's also important to know that when the markets are moving really fast, everybody is going market orders, and the queue gets so full that your order will not be executed at all. It'll tell you to resubmit your order and resubmit your order. Now that I have my order in place, we can see the details down here. The most important number is to notice the liquidation price at $7,802. Because I've selected low leverage, my liquidation price is quite a long ways away. What that means is that if prices get down to this level, I'm losing so badly, the system is going to actually automatically close my trade at the market, whatever the price is. The higher your leverage, the closer the liquidation price is to your entry price. And so when you're doing 25 and 50 times leverage, the liquidation price comes up very close. The next thing we want to do as we are setting out our trade, we want to be sure that we put in our stop loss order. So we can do a stop at the market, or we can do a limit stop. In this example, we'll do a market stop. So if the price comes down to $10,295, $295, then I'm going to set the sell stop. An important option to click is close on trigger. This will ensure that this only reduces my position. So now I can just hit the sell stop, so it'll sell us out of the 100 contracts that we bought at that price. There, the order is submitted, and depending on how you have your panels set up, you can see that I have my stops in this panel down here, that we can see that the stop is at the market. It is currently untriggered. The next important thing to know about the stop loss order is that you can just grab it and slide it to where you want. I don't recommend that you move your stop loss back if the prices are coming back. Set your stop loss based on technical support and resistance levels, not on dollar value, and then resize your position size down to the dollar value to keep your risk to the correct ratios. And we talk about that more in the courses on intro-to-cryptos.ca. And so we've covered how to enter the market with a market order, and how to set up your stop loss, and how to adjust your stop loss. Now we're going to talk about a more advanced trading entry method that will save you tons of money. And I'm going to exit this order now in the fastest way possible, and that is just to click on close the position at the market. And this will sell 100 contracts at the market. There we go, order submitted and order filled. The next way to enter the market is with a limit order. The limit order has two advantages. First of all, it stops you from FOMOing into the market. Second, it saves you a ton in fees. In fact, you actually get paid fees. And so to enter at a long position, I've got to enter my limit order down below the market. If I'm going to enter a limit order and try to get in on a short, then I must enter my limit order above the market. And the reason is we are putting our order into the order book with the post only requirement. That means that our order will be in the order books, or we'll wait for the market to come down to our price level. And when it comes down to our price level, or up to our price level, then we are triggered into the market. So let's do a limit buy order, and we're going to set it at 327. And then I'm going to click on buy long, and it gives us the order details here. And there we have, the limit order is now submitted. We can scroll down here to see our active orders, that we have an order for $100 US at 327, and the order value will be 0.096 XBT. And we can see the available XBT that comes free when you set up your account here. This pretend Bitcoin is available there for you to practice with. So now we have our limit order. We would sit and wait for the prices to come back and touch us in. As it came back down to here, it would give us those 100 positions long. And then we hope, of course, that it's going to be going up. The limit order would be great to have touched in right here, and then the price goes up. You're making fantastic profits. And this is what we're trying to do, is try to not FOMO into the market, but we also want to get paid for taking this position. And I encourage you to scroll to the bottom of the screen and click on fees. You'll notice that there are taker fees, which we paid when we did our market order. We had to pay the taker fees because we were taking orders that were available in the order books. With our limit order, we'll be paid the maker fees when our order is executed. So we'll be paid 0.025% of our trade size as a bonus for having been there to produce the liquidity in this market. Later, we can do more details about the short funding and the long funding, and we can talk about the differences in the maker fees and the taker fees for trading in the cryptocurrencies. You can see there's a significant difference if you are trading on a market order or if you're trading with a limit order. It is a huge difference. Money out of your pocket or money into your pocket to start off your trade in a failing state already has things against you when you're trying to trade in a difficult environment to begin with. So now we can zoom in and we can check out the 1 minute bars on this. And I may be really impatient and wanting to move right in close to this. If this moves back one tick, I want to be kicked into this market. Instead of trying to buy at the market using a market order and paying the fees, I want to be paid for jumping into this market. So I want to think about it ahead of time, plan out my trade, and use the limit order. Now, even when I have the limit order set, and I know that I'm going to be tagged in there, I can already set my stop loss order. I can do a market stop order at, say, if it comes in and it tags us, but it continues going down past 321 or 295, then I'll set my stop order. Place that stop. And it gave me the warning saying that, hey, you don't have an open order right now. Do you want to go ahead with this? And I said, yes, go ahead. I know that. There is no open order right now. But if this price comes back and tags us in with our limit order, we'll be long 100 contracts. And now we have a protective stop loss that is going to kick us out as soon if we are wrong and the trade comes against us that deeply. The protective stop loss order is like a seatbelt. You always want to wear it. You never know when an accident might happen and the market may just move really quickly. You don't put on the stop loss after the accident happens. You don't put the seatbelt on when you see a crash is coming. So be sure to always use the stop loss. And that'll wrap it up for this very brief, quick BitMEX tutorial. We went over how to set a market order and how to set up your stop loss. We talked about how to set up a limit order and how to set up your stop loss. And we talked about the important difference between the fees that you pay as a market order or a limit order. In the next BitMEX tutorial, I'll cover more details on the trailing stop, the take profit limit, and how to use the stop limit properly in declining markets and in rising markets. Thanks again for watching along. If you're going to start up your BitMEX trading, be sure to click on the referral link down below. I'd appreciate that. But more importantly, hit the thumbs up and hit the subscribe button. And if you have any questions you'd like to have answered about trading on BitMEX, I would love to help you out with that. Leave those questions down in the comments below and we'll bring them up in the next BitMEX tutorial video. Thanks again for tuning in, and I'll see you on the daily live streams. as we cover these markets: Cardano, EOS, Ethereum, Litecoin, Tron, and Ripple for our BitMEX Trading Journal. Cheers. Bye for now.